Hello. The company being analyzed today is Arkade Developers Limited. This is a 3,088 crores worth real estate developer company. And this is a very interesting company because this is a company which wants to go from a 683 crores in revenue in fiscal year 2025, which it achieved, to 10,000 crores of total revenue by 2030. Now, this is cumulative revenue, okay? So from 2027, sorry, from fiscal year 2026 to fiscal year 2030, it wants to have a total revenue of 10,000 crores, which is around 5 years. But if you divide it by five, this 10,000 crores, that still comes out to 2,000 crores per annum. If you compare this to its current revenue of 683 crores, net profit of 157 crores, by the way, 20% plus net profit margin company, so highly profitable. This company is trying to go for massive growth from 683 crores to 2000 crores per annum company. That is what's trying to aim for. So today we're going to analyze this company. We're going to analyze the company's financials, what it actually does, and how it's going to attain that growth. So let's start. We first have a market cap of 3,088 crores. Okay, pretty small company. Current price of one share is 166 rupees. Book value, this is assets minus liabilities. That is book value. Book value per share is 51.4 rupees. Really nice return on equity, 25.8%. Really, really nice. Return on capital employed, 30.3%. Again, really, really nice. Price to earnings ratio of 19.6. Okay, nice return on equity and capital employed numbers. Now let's look at the revenues. So we have sales, we have operating profit, we have profit before tax, and oh, sorry, hold up. Yes, we have profit before tax. Finally, we have net profit. And just pay attention, if you can, slightly to this operating profit margin. This is EBITDA or operating profit, 24% operating profit margin. So in 2021, it had sales of 106 crores. Then massive bump in 2022 to 225 crores. 2023, a slight degrowth of 220 crores. Operating profit actually increased. That's a good thing. Then massive bump in 2024, 635 crores. And in 2025, 683 crores, slight increase. Operating profit margin, 30%, 206 crores of operating profit and 157 crores of net profit. So you can see in this business, there was a massive bump, some stabilization, massive bump, some stabilization. So it's a bit of a non-linear business. Basically, when major projects get launched, massive revenue jump. But then for the next major project, or project in this case, be a building, be some new apartment complex, takes time to build all that stuff. So that's why revenues are like that, sometimes accelerating, sometimes not. Now let's take these numbers in percentage forms. Last 3 years, the compounded sales growth has been very high, 45%, despite the stabilization, 45% compounded sales growth. Compounded profit growth, 48% last 3 years. You can see ATM is trailing 12 months, last 12 months. Return on equity last 3 years ago was 32%, last year was 26%. So let's see where it goes from here. If you want to take a look at the cash flow, it's really not that solid, at least in terms of cash flow. Pay attention to cash flow from operating activity, 144 crores in 2021. Nice. Look at this. 2022, 2023, negative 125 crores. 2024, yes, positive. 2025, minus 218 crores. So cash flow wise, it has shown it's not really big on cash flow. It's really not. It's really not. Now, oh, sorry. Yes, Arcade, what it actually does. So 39 years. This company has been around for 39 years. Let me just go in. Okay. 31 projects it has actually delivered successfully. So it has a history, long history. Okay. 5.5 million square feet worth of development real estate has been delivered, and 2 million square feet is currently under work. Then This is a leading MMR developer. What is MMR? What is MMR? Mumbai Metropolitan Region. That's MMR. Okay. It's an asset light model, all right, and a zero net debt. Now, net debt is total debt minus cash and cash equivalents. So it's trying to say that its total debt is either very much equal to its cash and cash equivalents or slightly more than its cash and cash equivalents, which is a good thing. See, cash and cash equivalents only, meaning not even talking about the fixed assets of the company. Cash and cash equivalents are equal to debt, which is a very good thing, and it's expanding in the eastern corridor, I believe, in the Mumbai region, basically. Then, moving on, let's discuss some more things. Okay. Now, these are the portfolios. We will not take a big time here. These are the ongoing projects. And you can see these dates: June 2024, January 2025. You can see the names, and you can see these are the projects that have actually been completed. Now, I want you to pay attention to total projected revenue. See, 12,057 crores from these completed projects. Okay. And you can see in details of sale how much has actually been sold. So 12,050 crores out of 12,057 crores have been sold. Unsold is only 7 crores. So thing to pay attention here is that many of its recent big projects it has sold, it's actually sold majority of them. So not a lot is left unsold. And that's a good thing. Meaning it has made projects which are actually getting sold. It's not like projects are not getting sold, that will be a bad thing. Now, these are the projects, as you can see, these dates: December 26, December 26, June 2027. These are ongoing projects expected to be completed. And the expected revenue from these, you can see, is 2,051 crores. And here they will be completed in this date: 2,061 crores. And a portion of them will be left unsold because they're still getting worked over. But good thing, completed projects, majority is actually getting sold. Now let's go to the important part. Where is it going to achieve the growth from? The upcoming projects, the actually upcoming projects. Pay attention to Filmistan, a nice name: Filmistan, Thane, and Anand Sagar, also wooden mills. These four. Look at the projected turnover. These are some recent projects he's going to work on, okay? Not currently working on, but about to work on, about to start building. 3,500 crores of revenue turnover from Filmistan alone. Look at these projects. These are massive. 1,900 crores of projected turnover, 1,000 crores, 1,700 crores, 800 crores. Again, they're not going to come at once. It's a construction business. Revenue is recognized in the profit and loss statement based on milestones or amount of construction actually done. So it's not going to come at once. It's going to come in stages, but just look at how much it's planning to do. If the company achieves this, and if that is still a big if, completing projects on time is a big thing. It can always not happen on time. A lot of problems. If it can do complete these projects, look at the massive amounts it can make. And you can see these are greenfield projects. Greenfield means made on something completely new. Brownfield, expanding on something already existing. And this is redevelopment, society redevelopment. Old stuff is being redeveloped. And premium, it's categorized it as premium. So that's a good thing. That's a really good thing. Then these were the new acquisitions in quarter 1 fiscal year 2026. Very new. I'll see, we already covered. Filmistan project. It's in Goregaon. Goregaon. Okay. Gurgaon got some competition. Gross development value of 3,000 crores, 4 acres. Wooden mills, 1,000 crores, Thane project. And we got Jal Ratna. So these are some new acquisitions it has gotten. And these are going to contribute to the growth. And finally, yes, debt profile. This is the net worth. You can see massive skyrocketing in its net worth. Grown very well. Even here, going from 149 crores to 200 crores of net worth is massive growth in percentages. Net debt, it did say it was net debt free, but on an annualized basis, like some months will be high, then some months will be low, and you will analyze it. You will aggregate all of that and give an average. So currently it has 110 crores of net debt, meaning net debt is 110 crores more in cash and cash equivalents. Then, then, what is this? So this blue line is debt to equity. Nice, 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 nice. 0.18 debt to equity, not the highest. Net debt to EBITDA, okay, 1.12 in September. This is September. So March 2025, both were negative, meaning debt was negligible, negligible, extremely low. I think almost negative. Yes, debt was maybe less than zero. If that's possible, I don't think debt being less than zero is possible. But basically, extremely low, extremely low. Then what else can I show? Yes, some more financials. As you can see, the EBITDA margin, 27%, 30% for these years. Consistent EBITDA margin, very, very good. It's actually paying taxes, actually paying taxes. Nice. Earnings per share, you can see 3.3 rupees, 8.1 to 9.25. Even earnings per share is increasing. I don't know if they have actually included stuff like dilution into this. Who knows? Do check it out. Now, let's go back to screener. I would like to show one thing here is this. Okay. In the profit and loss, see interest paid on loans. If you compare operating profit and interest, you divide operating profit by interest, becomes the interest coverage ratio. Okay, kind of important for figuring out the company's ability to pay back loans. So 26 crores operating profit, 1 crores of interest, and we move forward in the future. You see 206 crores of operating profit, 2 crores of interest. Extremely debt-free company, very, very low debt. So that's a positive. So very low interest, it seems almost negligible amount of interest payments, which is very interesting to see. Interest has not really risen like 1 crores to 4 crores, 1 crores to 3 crores to 2 crores over the 5 years. So interest very low. Operating profit is rising. Cash flow, it's not a good thing for cash flow. It does not have good cash flow. Some major projects are gonna come. And one more thing, you see this Filmistan, where is it? Let me go and find. There's this Filmistan and Thane. These massive projects, right? The company is expecting revenue acceleration. That is the revenue to come from these projects. Okay, I can't find Filmistan. The company is expecting this Filmistan and all these projects to give revenue in fiscal year 2027. So it is expecting a nice revenue growth in fiscal year 2026, but it's expecting massive revenue acceleration to come in fiscal year 2027 and fiscal year 2028 because Filmistan in these massive projects are going to be launched in those years. So, and one more thing I have to mention. So yeah, interesting company. It's positioning itself massive growth with these new acquisitions. Debt, I think, yeah, it really does not have a lot of debt. We looked at those interest payments on debt, it is very negligible. And let's see if it can actually achieve this revenue target, these projects, and execute it on time. That is it. Bye.